Good morning and welcome back to another session of weekly market review. What we are seeing on chart is of Nifty. So for the week, Nifty closed positive 1.9%, and in the process, it has made an all-time high. It's broken the previous high of 19,900. And another great good thing about this week is the fact that Nifty is closed on a fairly strong wicket, which is and the candle that's got printed for the week is a fairly strong candle. So this at least gives you a perspective that we are nowhere near the so-called uh, sell-off that we are likely that we've been talking about, or market being in a bubble territory and so on and so forth. So I think, especially on the large caps, given that we are seeing Nifty moving after downward move and some bit of minor consolidation. I think we are nowhere near close to the sell-off pressure that we've been talking about, or as Nifty was making a downward move. We were expecting that there's a probability that Nifty may continue to keep building on the downtrend, which doesn't seem to be the case because the pattern of the candle that you can see are three decent wide range candle, the every successive candle being wider than the previous one. So this pattern is called three white soldier, and it's a fairly bullish. It's a fairly bullish candle per se, or pattern per se. Now let's look at what has happened on a daily basis. So obviously this week was not devoid of some bit of not devoid of any drama per se. This week we obviously saw some bit of scare early in the week. So this wide range candle on Tuesday had a fairly negative connotation, and the way markets were selling off early in the morning on Tuesday was fairly. It looked like we are likely to hit a air pocket and may start trending downwards. And especially this has happened as the markets made an all-time high on Tuesday and then started the downward pressure. So, so actually, the open of the day was at all-time high, and then we started seeing downward pressure right from the word go. While in Nifty and Bank Nifty, this candle does not look as ominous as this looks in case of small, mid, and micro cap, and which is the reason which made us think again as to what is happening in the market and possibility of probable downward pressure that we were talking about, especially in mid, small, and micro cap, because there obviously some stocks have just kept going up uh, like crazy, and such downward pressure, a strong downward build on can happen is has been the assumption for many weeks now. So there was a possibility that that assumption can play out, but markets had other plans. So Tuesday, by the end of the day, we started seeing some tail element in this candle, and then on Wednesday, Thursday, we kept building on it, and we had a good close to the week. So this is what we see in Nifty on a daily basis. Now let's look at weekly candle, hourly candle, right? So we have been talking about what is the possibility of what can play out in the market. So we had clearly marked out these two zones as zones where one can look at some bit of short-term trade. As Nifty clears out this zone, this red candle, this is something that we had kind of drawn 2 weeks back, I guess, saying that this can be a level where one should possibly think of going long in Nifty and add on some more as the Nifty clears out this zone. So this trade has played out well. While I'm not a short-term trader and I don't take index trades, but this trade has played out well. So there's a 530 point gain. Even if someone would have come here, it would have worked out as close to 480 to, yeah, so 450 points approximately for the trader, which is absolutely a decent outcome if you're going into index futures kind of instrument. So this is the view on Nifty as to what has happened in the market at this point of time. This wide range, this small candle with a huge volume uptick is something that we have to kind of be aware of, but it doesn't look like uh, at this point of time it can pose too much of threat or danger to the market. but we have to take each day as it comes. As we are definitely in a overstretched territory. Uh, when we look at other indices. I think we'll get a better perspective of what is happening and what is driving this kind of rally in the market. So this is so. What do we think can happen in Nifty, and that is more important, right? Like as we said that this. So I think we are in a wait and watch mode. We cannot keep expecting or assuming that from tomorrow this will happen or for tomorrow that a takeoff will happen. I think what we need to keep our eye on is you know keep working with tighter stop losses at this point of time, given that the gains have just about started. I think this can be expected as a support zone for the markets to kind of trend. And I think if this is too close to comfort, then this would be the level, which means if you are a short term trader, your gains will get restricted to a fairly small number. But I mean, that's the logical way of approaching this trade rather than trying to kind of do anything else in the market. So this is what we think can happen in Nifty. One should be prepared for Nifty to make a move like this, right? And then take off rather than thinking that it will take off like this. Either ways, I think this should be the stop loss. As Nifty keeps moving up, I think this stop loss can one can keep trailing the stop loss to higher levels. I think first logical level would be this one, and then build on from there. I think this is what we should look at in terms of Nifty. Let's look at other important index and which is changed the texture of the market completely, which is our Bank Nifty. So let's look at Bank Nifty on a weekly basis. Obviously, Bank Nifty is the one which has again driven the positive sentiment in the market, as we were talking about as we were talking about last week, right? This week, Bank Nifty closed positive 2.4%, which is a very good number considering the fact that Bank Nifty was a laggard in this entire uptick. So it gave the support that market wanted when market was in absolute doldrums in March last week, and then from there it kept moving up and then consolidated for many weeks or didn't move as much as other indices have moved, and now it has started its move. So this is positive as far as Bank Nifty is concerned. There's a volume uptick on weekly basis, and we are just about uh, at a kissing distance of all-time high, which is 46,385, I guess, some number around that, and we are just about there. So this is 46,350 the number, and we are just about there. I don't see a reason why on Monday we should not be able to at least take out that number just for the sake of psychological comfort. So, so Bank Nifty on a weekly basis has printed a very strong candle, and it's definitely a strength candle. One should not expect any let down in Bank Nifty right away. Uh, Now let's come to daily basis as to what's happening in Bank Nifty on daily basis. So, so this week, Bank Nifty came out of the last week. Bank Nifty tried to come out of the range that we had kind of drawn made for a short term trader in index futures, and it has continued to kind of keep moving up for the week. Obviously, we saw a downward pressure candle on Tuesday, as we were talking about other indices also experiencing fair degree of pressure on Tuesday, as the markets kind of saw some bit of sell off early in the morning. So Bank Nifty overall has printed a positive candle at this point of time. Bank Nifty, if someone had taken a trade in Bank Nifty, it is up 1,100 points, which is a fabulous number depending on the number of lots one kind of takes. So that's what Bank Nifty looks like on a daily basis. Let's try and zoom into what is happening on a hourly candle, right? So this was the Tuesday morning's first hour downward tick or downward pressure, and then we consolidated for next few hours, and then we just took off. So it's a good positive week for the Bank Nifty. Obviously, these candles, these uh, smaller candles with wicks and small bodies, definitely something that you should keep in mind. That the strength that we saw here is kind of uh, dissipating as the Nifty is moving to higher ground. Let us see as to what kind of strength Bank Nifty shows as it tries to take out the all-time high level. I am hoping, let's hope that it takes off. If you're long and if you are if you have a lot of if your entire portfolio is in equities at this point of time, I think we should hope for a good positive uptick driven by Bank Nifty, and hopefully this week we will see Bank Nifty taking out the all-time high level. So broadly, these are the two broad indices that we kind of try and dig deeper into. This week, what we will do is, given that there's not too much of in-depth technical analysis which is required, as both Nifty and Bank Nifty are in a good positive trend. What we will try and see is that what is driving, which are the other sectors which are doing well, and what kind of pattern are they forming. But before we do that, let's finish off our review of Nifty 500 and then few of the other indices, global indices that we look at, which is Nasdaq. So Nifty 500 is in a different structure as compared to Nifty and Bank Nifty for the week. So while in case of Nifty and Bank Nifty, we saw strong closing and closing right at the upper end of the candle. In case of Nifty CNX 500, which is predominantly Nifty, the top 500 stocks, which includes mid and small cap, 400 mid and small cap stocks. There we see this has played out on Tuesday. As I said, there was a strong strength candle, downward pressure strength candle on Tuesday, and then we didn't see a wick as compared to what we saw on Nifty and Bank Nifty, and then we trended slightly lower on Wednesday morning as the news flow and some bit of stress of the fact that we are in a bubble territory kept making a lot of news and noise and TV channels, and then we try to again move up. But these candles are not great candle, uh, and one should definitely keep an eye on what is happening with these with CNX 500. This is broad market indices, which essentially is that fact that you should keep an eye on Nifty, mid cap 150 and small cap 250. We'll see those two charts as well, but let's finish our review of now global markets, which is your. So let's start with Nasdaq. Nasdaq on weekly basis has closed, has again breached 50 DMA. This is 10-week candle, which is 50 DMA, which we will see when we do the daily analysis. But if you see, Nasdaq tried to move up over last, but then has stalled after a swift move of 2 weeks, and then again now we are seeing smaller candles, volume are picking up, and there is some bit of downward pressure building up in Nasdaq, and this is an important indicator or sign of what one should keep an eye on. So this is on a weekly basis. Let's come to daily. That's when we will see. So Nasdaq has. So let's convert this into 50 DMA. That should. Yeah. So this is 50 DMA. So Nasdaq, which has been kind of trying flirting with 50 DMA, has failed at 50 DMA again. Let's, yeah. So now it's clearly visible. Nasdaq has gone below 50 DMA, tried to go up, but then this gap region is something that it has failed at, and now again it has printed a wide range candle with high volume pickup at right at 50 DMA. So this is not a great sign for sure. So while Indian indices are trying to move up, but global indices, at least the Nasdaq, which started all the rally, is not in such a great territory. And same is happening in S&P 500, which is the broad market index. Huge volumes, downward pressure. Huge volume, downward pressure, failed at 50 DMA. Uh, let's see if there's anything else that we can identify on this chart. Yeah, so now started printing lower high and lower low. So you can draw a downward trend line as well. I think if we continue to see downward pressure and if we breach this candle, I think we are definitely looking at pressure picking up on the downward on the downside. Dollar is strengthening, and this is not good for equity markets, at least the Asian equity markets. I think one market which has done exceptionally well and which is not something which a lot of people have noticed is Nikkei, which is Japanese market. See the breakout which is playing out in Nikkei. So this is daily candle, this is weekly candle. If you see, Nikkei kept consolidating, saw a move towards 26,500. This is another downward. I think within across all markets, Nikkei is showing a different kind of pressure, strength. Yeah, so and then oil is definitely moving up, and oil has broken out of a stage one consolidation and has broken out and started making swift move. So one should be aware of this, and this up move can continue. This up move would definitely derail the fight on inflation across globe. This is something that is definitely a cause of concern, and one should keep an eye on this. So broadly, if you were to look at a quick summary of what is happening in Indian markets, so Indian markets large cap are showing tremendous strength, and that is good because large caps have been consolidating for a while now, while mid and small caps continue to keep moving or marching ahead with a lot of pace and vigor. And both Nifty and Bank Nifty in terms of structure, shape, and the buying behavior shows that there is a upward pressure or upward momentum continues to exist in both these indices. As a trader, we've marked out some bit of levels both in Nifty and Bank Nifty. One should keep them in mind and keep moving their stop losses up as the market moves up. Whereas, what can definitely challenge this up move is how Nasdaq is behaving and how oil is moving up, and overall global markets, especially US market, they are not behaving well, and one should keep an eye on that. Within Nifty, what is causing the up move, or if when you try and do some bit of dissection of the markets, the Nifty Auto is in a different world. Look at the vertical move it has seen. This week again, it has gone up by 2% or so, and it has consistently moved up. It has staged a breakout again last week. This is something which one should keep an eye on in terms of these a break in any of these indices can definitely cause some bit of pain to the market, and these are stretched in terms of the distance that they have traveled from their mean. So the relative strength of Nifty Auto is extremely strong. IT is something which is doing all the good things, and it is definitely in a buying range. One should not get worried about what is happening in IT. Obviously, it would react if Nasdaq were to react, but this is not in a bad zone at all. Pharma has done exceptionally well over last 3 4 months, and it I think has it has yeah. So it has moved. It has made all time high again after the COVID peak was 15,000, and today we are at approximately 16,000 kind level. So we are at all time, we are in that all time high territory, and a lot of stocks within pharma sector are doing well. Service sector is something that we kind of looked at last week closely, and we said that it can stage a breakout, and if the breakout were to happen in service sector, it can be good for the for the stocks within the sector because it has been consolidating for last 2.5 years. A micro cap, look at the kind of downward pressure that we saw in a single day, and this is something which is scary. And and you look at the follow through which is happening here. Follow through is not great. We are yet to counter this wide range candle, while micro cap and small cap, the index candle itself, counter or not countering it is not so great, but you look at the buying pressure or buying strength which is coming back, it's not so great. So be careful. I'm trying to kind of be extremely cautious. Financial services is doing well. No need to get worried about financial services. The structure is same as Nifty and Bank Nifty. So this is a stock. This is a security which is in a different world, a world of its own. Look at the way it is breaking out with huge wide range candles every time it breaks out with wide range candle and keeps moving up. So this is something which is definitely brought a lot of cheer to investors. But this entire rally in PSU Bank is playing out on two grounds. One is that a lot of them have, after kind of having going through a rough phase of NPAs, are coming back and doing decent profits. There's also a lot of public momentum or news driven momentum out here that some divestment would happen. Few of these stocks can see consolidation, so on and so forth, which is what is driving this index. So at this point of time, there's no point in chasing such stocks or this index per se. Consumption has broken out of 50 DMA last week and is doing well. Small cap, similar structure as micro cap. See the follow through. It's definitely not great follow through. 500 we spoke about. Small cap 250 we spoke about. Nifty Junior is again in similar zone. So it's basically evident that large cap is something which has been the driving force, and within large cap it's banks and IT which are the driving force. So look at the difference of IT. So this was when Tuesday it was positive, while the entire market, so it went down, but then it quickly made a comeback, and then over next 3 days it's taken out this candle and kept moving higher. But obviously, the range of candles are not great, but there's nothing negative about this index per se. Look at Bank Nifty. Tuesday's wide range candle got countered immediately and kept moving higher. Now, compare this with Bank Nifty Small Cap. Wide range candle, downward pressure continues, some bit of trying to fight back. So, this is not a great sign. This is not a lot of buying pressure that one would want to see in the markets. But having said that, indices are above its 50-day and 100-day and 200-day benchmark. This is another interesting index. If you see the downward pressure, and then now this index has been moving up swiftly for many months and years. So it's the PSU story which is playing out again here, and FMCG is yet to counter the 50-day mark, 50-day moving average. So So broadly, that's it. We had summarized as to what one should think of in the markets. But if you have lot of positions in Nifty, mid and small cap, keep an eye on what in those individual stocks are doing, because indices can keep you can be misleading, while you can think that markets are going up, but undercurrents and under the surface of the market there would be stocks which would be doing very different things. So keep an eye on them and have a great week. We'll see you guys again next week. Thank you.